All right, guys, back to work. Back to work. Weekend is over. The first week of March is upon us. Boy, we had a fantastic month of February, a crazy good week last week. So let's keep the good times rolling this week. Now, we finished the week last week with that big move higher on Fridays, right? Fridays love to run. That big move higher we saw on Friday opens up a ton of opportunity for us, really the entire week this week. I have a handful of trades I'm tracking for tomorrow. By the time we're done the video tonight, you'll of course know my favorite trades for tomorrow, but more importantly, you have a roadmap to make money no matter what the markets throw at us on Tuesday morning. Now, before we jump in and talk my favorite trades for Tuesday, make sure you subscribe to our channel. By now, you probably know by now, you don't want to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, do me a favor here tonight, hit that like button for me, give me a shout out, introduce yourself, say hello in the comment section below. Either way, thank you so much for tuning in, supporting the channel, sticking around tonight. I'm a few minutes behind schedule, so thank you so much for your patience. But let's get some charts going here, though. Charts are all ready to go. NASDAQ triple Qs are all ready. S&P and the SPY is ready. There are four very simple but important clues on these charts right now that are making it pretty obvious, I think, to where the best entries, the best exits, the best winning trades are going to be for tomorrow. This one really important clue right in front of us on this 60-minute chart, and that, of course, is that big, strong move that we saw last Friday. Now, that big move higher we saw from last Friday tells us one important thing, right? It tells us that the buyers have all of the control over momentum right now. So we know the best direction, or at least the best odds of success, are on the buy side right now. But there are three more important clues that I think will help us time the best entries for tomorrow. We'll talk about the three additional clues and why they're important to time the proper entry, because it's good to know the direction, but the timing of the entry is the most important thing. We'll talk about that a moment here from now on the tick charts. Before we drill down to some tick charts and talk entry tactics and three additional clues for tomorrow, let's double check our schedule for tomorrow. There's actually one news event I'm tracking for tomorrow. It is the ISM Services Index. Of course, the big block of news there at 10 o'clock Eastern time. But the ISM Service Index is definitely the big market catalyst for tomorrow. You have to think everybody's looking forward to hearing from Jerome Powell on Wednesday morning, Thursday morning with his semi-annual testimony on Capitol Hill. But until we hear from Jay Powell on Wednesday and Thursday, we assume, though, tomorrow, the big number tomorrow, the big market mover is going to be that ISM Services Index. We saw the ISM Manufacturing Index last week, and that got the markets moving. Hopefully its cousin, the Service Index, will give us a good shot in the arm tomorrow morning in our trade room. Don't forget, anytime we see news at 10 o'clock Eastern time, you best be paying attention. So keep that on your radar for tomorrow. Now back to our charts. It's good to know when the news is, but as you guys know, the money is made on the charts. Now, I mentioned a moment ago, we got one big clue right now, four total clues that are telling us where the best entries and exits will be for tomorrow. One of the important clues is this overall directional bias on the 60-minute. But now let's get serious on some entry tactics, right? Because direction is kind of the easy part right now. Let's now drill down to our tick charts. I think tick charts make the entry timing a hell of a lot easier. This, of course, is a 7,000 tick chart. You'll see linked up there in the upper left-hand corner. And if you're watching for the first time right now, welcome aboard to the channel. If you're watching for the first time, that is the 21 EMA, pretty much the only indicator you need to make money trading with us every morning in our morning trade room at 8 o'clock Eastern time. There are three more clues on this tick chart. Let's go through them quickly here, and we'll talk about putting all these pieces of information together and putting together a game plan for tomorrow. The first clue we know is that big move higher from last Friday. You can see that big move up we saw on the 60-minute, but it really is more pronounced on the tick chart. Look at the size of that big move. Now, anytime we have a big move higher in this overall bull market, we know that nobody wants to buy high. Whenever I see a big move higher, I don't want to chase it. I like to look for what I call two-legged pullbacks and to retest the high. Two-legged pullbacks to allow buyers to buy nice and low, right? Two-legged pullbacks and a retest of the high. So one very important clue right now is we know that buyers have the overall control, but we have to think they're going to be trying to buy as low as they can to avoid chasing the market higher after that big move up last Friday. Another very important clue, and the third total clue on these charts is a recent range breakout. And you can't see it very well on the tick charts. Go back to your 60-minute time frame. That was a trading range, and we know ranges love to break out and then pull back, break out, and then pull back. We saw one last week, had a range on the 60-minute, break out, pull back, and go. So that previous trading range, and again, it's easier to see this on the 60-minute, that previous range breaks out, pulls back. Now, we already know that we get this big move higher last week, right? So we already know the buyers are trying to buy as low as they can, and that seems to go right hand in hand. There's that breakout pullback. So on that 23.5 level here on the S&P, and it'll be very similar, of course, on the Nasdaq, we'll talk about here in a moment as well. So range, breakout, pullback. Now, one of the most important clues, the fourth and final clue, is this range and reversal off the high. There's a trading range we saw at the end of the day on Friday. Ranges, of course, we talk a lot about this in our free video classes. Ranges love to rotate. So once we find that trading range, we go underneath the range. The amount that we go below is projected now above the high. That creates an area of resistance. We chop around for a bit, finish off that pendulum swing, we call that in our free video classes. And now you'll notice it's a very strong reversal, a range reversal off of that high. Now, this is a very, very important part of the process, and I do believe this is the most important clue out of all these clues so far, because anytime I see what's called a rotation off the high, there is so much momentum for these sellers that oftentimes it will pull back and retest that low. Again, all that momentum, we know we're an overall bull market, right? Overall bull market, but all of that momentum coming off that high, oftentimes you can't stop that pullback and that retest of that low. So think about all these clues. We're overall bullish, a big move, we're trying to buy low, a recent range breakout, we're trying to buy that breakout pullback zone, and the final clue is the strength of that range reversal. I think if we play our cards right tomorrow, we can buy with some bear traps on the bounce. We can sell that breakout pullback for the bears. And if we're really lucky, if the trading gods are really watching down on us tonight, we could trade that double bottom reversal. If you watch my videos, you know how much I love double bottoms in an overall bull market. This is how we wrap together all that information, all four of those clues, into an easy game plan to make some money tomorrow. Now, we're gonna talk about this in a lot more detail, and later on in the video, I'm gonna talk about some variations of this, because this is a very simple way to look at it, but the markets, they love to throw some curveballs. We get Jerome Powell on Wednesday. You know, for example, this thing may continue to accelerate as we go lower. We'll talk about how to sell that, how to buy that as well. So plenty of trades we're tracking for tomorrow. So let's talk about this. You want to be thinking about, as we go lower, again, buyers are trying to buy down here, but we have to anticipate the pop up and that retest, right? The bears will be waiting for that run going lower. When I think about buying in a market like this, I think about all that bearish momentum and this one type of entry pattern we look for in these cases. With all those bears, right, kind of bearing down on top of us here, we have to look for what's called a bear trap. Now, bear traps are very, very simple. We saw a couple of them today in the trade room. It is bears try once. It is bears try twice. It'll be a higher high in price. It'll move right below that swing between those lows. There are a lot of examples of these inside of the free trading course. Again, we call these trap patterns, right? Trap setups in the free video classes. This is a bear trap. Bears try once, bears try twice, because we can all agree, right? This is probably not a great place to get short. We're at support, overall bull market below that trading range acting as a magnet. That's my first favorite trade here for tomorrow. Now, we're probably not going to go right back up again because all of that momentum will want to hold the underbelly of this. Now, how do we short this, right? Because again, it's an overall bull market. How do we short this? Well, what I'm going to do is try to trap in some rookie buyers. This is not going to be a very good place to be a buyer. I want to buy as low as we can because of that big move up that we saw last Friday. If I can get these buyers to try once, try twice, I'd like to use what we call a two-try failure. It's a variation of a bull trap, right? We're not going to need a technical bull trap, but one try for the buyers, two try for the buyers. These are rookie buyers, right? Not professional buyers. Professionals are waiting to buy as low as they can. But if I can trap in those rookie buyers, I can then use their stops, right? I can sell in those stops and retest that low. Now, think about this for a second. If you sold short on that pullback, where would your first target be? Be right back to retest that low. If I retest the low, though, now we're down in that big buy zone, that breakout pullback buy zone. I would love to get that classic double bottom reversal. Now, you know me, right? I don't have a crystal ball. This may keep on going lower. So I'm not going to blindly buy that double bottom. What I'll do is I'll see if I can get some inexperienced rookies coming in and chasing it lower. Look for another one of those 1, 2. You don't need a technical bear trap. I wouldn't complain about it, that's for sure. All I need, though, is bears once, bears twice, rookie bears, right? Get those bears trapped in and think about now where those stops are and squeeze those stops for that run going higher. So think about this kind of game plan, this dance for tomorrow. Bear traps as it goes lower into support, right? We look for those, what is basically a bull trap, but technically it's a two-try buyer failure to retest the low because, again, all of that momentum coming off the high, and then once they retest the low, these double bottom reversals, which is ultimately a retest of that low, bears try once, bears try twice, and we're squeezing those stops. In fact, don't forget, my favorite trade after that double bottom is another bear trap going higher high in price. Get right below that prior swing. That's an easy way to add to that winning position on a bear trap going higher, right? I love this sequence to absorb the bear momentum, but stay focused on the overall long-term bull trend. Now, I know most of you guys watching right now, you know these patterns, right? You know bear traps, you know failures, you know how much I love double bottoms and range rotations. But listen, if you're watching for the first time right now, this might be a brand new language for you. But don't you worry, I teach all these entry patterns. I have hundreds, if not more than hundreds at this point, of examples of failures, traps, range rotations, all included, all taught in a lot more detail in our free video classes. What I'll do is I'll put a link up top here for you in the upper right-hand corner. Grab the link that popped up there and take that free trading course because the strategy I teach in that video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. And of course, I want to help you start making money on your own. I'll teach you 4 of my favorite entry patterns all wrapped together in that free video class. Guys, the markets are way too good right now not to be making consistent money. If you're missing the best trades each day, if you're taking too many losses, if you're struggling to qualify for a funded account, hit the link up top there. Take that free video course. It's perfect for someone trying to make the jump into full-time trading or add another income stream. And also don't forget too, if you can't get the link up top there, I'll put all the important links we talk about tonight. I'll put all of that in the description of the YouTube video. I'll put the free class links down there. We trade together every morning in our morning trade room. I'll put membership information for the trade room, the description, and also too, I'm on Twitter all day long. I'm posting updates on Twitter in between these YouTube videos. If you're on Twitter, all the info will be there. We can give you a follow there in the description of the YouTube video. All right, guys. So now you know where to learn more and see examples of these entry patterns I'm talking about in the video tonight. But more importantly, though, you know how to, again, absorb that momentum, but also stay focused, right, on the long side because, again, we are an overall bull market. Now, I mentioned earlier there are going to be some variations of this dance, right, this sequence. So let's talk about that now on the Nasdaq. The Nasdaq is very similar to the S&P 500, the SPY, in the sense that we are definitely bullish overall. We definitely have this very big move we saw to finish off the week. Again, big moves tell us don't buy high, wait to buy nice and low. And man, oh man, that range, right? That range, that breakout pullback looks like a perfect spot for buyers to come in and buy nice and low. Let's go to the tick charts here now. I use a slightly different tick chart, of course, on the Nasdaq because the Nasdaq is roughly half the volume as the S&P, right? So tick charts are based on volume. I teach all the stuff, by the way, in that free video class. Now, the NASDAQ is a little bit different. It's a little bit different, right? It's more of a big move up, bear move into a trading range. And again, right, we pop up above the range. And again, in the free video classes, you'll learn more about the range bound strategy. But bottom line is ranges love to rotate. So they go above the range. They're now going to rotate back down below the range. The bottom line is that even though the NASDAQ is quite different looking than the S&P is, it's still the same basic situation. It's an overall bull market with a very big move from last Friday. We assume traders are trying to buy as low as they can, but the challenge that comes along with buying nice and low is the momentum, right? That momentum is very bearish, really ever since the beginning of the week this week. So knowing that we're overall bullish, but also respecting the seller's momentum, this is where that bear trap, as we go lower, trapping in rookies who are chasing after it, use their stops, right? Use their stops to fuel the move, fuel that bounce going higher. I can easily see how the underbelly of this trading range could be a breakout pullback zone. That is an area where we could probably easily trap in some rookie buyers, buying once, buying twice. Again, you'll notice with me, I love to run stops. I think the easiest way to make consistent money in any market you want to trade is to trap traders on the wrong side of this 21 EMA. Use that two-try failure to sell back down again. And then once we take out that low, again, anybody who sold short up here, they're taking their profit at this low, and now we're nice and low, right? Now we're way, way down in an overall bull market. A horrible spot to be a seller, but a gorgeous place to trap in some rookie bears, make them squeeze their stops. And again, as we run higher, what's the entry pattern we always use? It's always going to be in this case, a bear trap whenever we're rotating off of that low, right? So bear trap entry, technical two-try failure pattern at the high and the low, the two-try failure pattern. Again, this will make a lot more sense once you go through our free video classes. And then again, that bear trap going higher, that higher high in price, and that trap below that low. Now, let's talk about some variations of this, right? This is the same stuff we talked about on the S&P. And one thing I always look for in these scenarios where there's a lot of potential for a deeper pullback is sometimes what happens is sometimes we don't get this support to hold and trap and bounce back up. Sometimes what happens is the market will keep on grinding down. If this thing continues to grind down, this becomes a lot more difficult to pick that bottom. So very careful, but very important. If we begin to looking at grind down, right? Again, we're very bearish in the short term, and with such a big move going higher, it would make perfect sense. The buyers may not want to come in right away, and they're waiting to get that range breakout pullback area. The most important thing, though, is if we begin to grind going lower, it becomes very difficult to pick that bottom. So instead, what I'll do is if we grind lower, I'm going to go out now and find one of those pop and grind channels. Very simple. If it pops and begins to grind going lower, all I do is I don't chase after. This is still a bull market overall, but now we can go out and find that channel by drawing off the low, pin it now up around the high. And then here's the trick. The trick is to look left and find one of those prior swings. And I always like to combine a prior swing along with the first touch or the first test We always say first test is the best test in our trade room, but the first test of that channel. Now, there's always a couple different ways to sell this, right? Again, with all that momentum, even though we're a bullish overall market, it's a very good chance here they're going to hold this and retest, or at least try to retest that low. So really there are two entry patterns we can use. If I can get above a prior swing, I can use what's called a bull trap pattern. Basically, it's a first test trap, we call this. A first test trap, which basically means the first test of the high of that channel. It's also a bull trap entry because it's right above a prior swing. First test trap, a lot of examples of those in the free video course. Now, we oftentimes will get above the 21 moving average, like up over here, right? Get above the 21 moving average. The buyers come in, they try to buy this thing, and they get smoked. Because again, you don't want to buy the bounce. You don't want to buy the bounce after a strong run down like this. The odds are better off for a retest of that low, then we go back up. Remember, anytime we see a strong move down like that, we expect a retest, then we can resume that long-term trend. So again, if we begin to grind going down, it becomes a lot more difficult to pick the bottom on this. Instead, what I'll do is I'll grab that channel off that low, bring it up around that high, look left, find prior swings, get that bull trap, get that buyer failure above that 21. Again, look for that 1, 2, and then back down. But you do want those two tries, because again, we're not picking tops, right? Our goal is not to pick the top. Our goal is to find the top and then wait and see what buyers do. We're an overall bull market, right? So I still want to respect the overall bulls, but I just don't think this is a great spot to be buying. If I can get rookies to trap in for a couple times, I'd like to use their stops to fuel that run back down. And again, remember, if we retest the low now, everybody who sold short up here, they're probably taking a bunch of profit off at that low. We can do it again, right? 1, 2, and then back up we go. It's all about trapping traders, buyers and sellers on the wrong side of the market. Now, one more thing you want to think about here. We might go lower. We may get that bear trap, also called the crown reversal in our free video classes. We may get that bear trap running higher. They may hold the underbelly, and we may see another strong run down. Oftentimes, the size of the breakout leg can be used as a measuring leg, just so you know, right? The size of the range breakout leg oftentimes becomes a measuring leg. So what I want you to be aware of is if this thing slams down with another leg down, then a strong leg down, I'm going to repeat the cycle again, right? Makes sense? Because there's a big difference between a bear trap takes out that breakout pullback and then retest that low. There's a very big difference between this situation where bears are selling into that low, right? That is an easy one, I believe an easy one to make money with. What is a lot more difficult though is if they hold the underbelly of that trading range and we see another strong leg lower. And again, that strong leg lower will probably complete that measured move. Now, measured move or not, that will be a lot of bearish momentum in the short term. We are still an overall bull market, so once again, I'll repeat the same sequence. It's a bear trap with 2 tries below that low. And again, at this point, probably some sort of channel coming down like that, but something will be up top you will find tomorrow morning in our trade room. Again, think about those that pop up, those buyers once, buyers twice, same sequence again. In this example now, it's just we get the first pullback, but then they run it lower with that strong move lower. That strong move lower will want to pull back and retest. And this is the dance we do. It's an overall bull market, but we're pulling back off that big move going higher. So trap those bears in. And again, on the short side, we're not picking tops. 1 try, 2 try, take your profit back down around that low. And again, that double bottom, that 1, 2. Remember, when I say double bottom reversal, that's a very broad term, right? The actual entry tactic we'll use will be a combination of a 2 try failure, trapping bears in below 21 EMA. Then as we go higher, it's always going to be that bear trap, right? It'll be a higher high in price and move just below that low. You'll learn a lot more about trap patterns in the free video class. All right, so just keep in mind on that. If it does make another big strong leg lower, this will also apply, by the way, to the S&P as well, right? The S&P and Nasdaq are pretty much the same situation. So size the breakout leg. That'll be our measured move leg, and hopefully we can find some bear traps to buy off the low. Obviously some buyer failures, some bull traps technically, right, to sell above the moving average and hit that double bottom reversal sometime towards the end of the morning, if not early afternoon tomorrow morning in our trade room. Right, guys? That is the game plan. That's the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade it with me. The easiest way to start making consistent money in any market you want to trade is to learn and trade along every morning in our trade room. We open up 8 o'clock Eastern time tomorrow morning. I'll put all the important links, the trade room links, my Twitter feed links, and most importantly, if you're watching for the first time right now, start first on the free classes, see all the trade examples, get your feet wet on that, and sometime soon, I'm sure I'll be seeing you trading with us sometime soon with us in the morning trade room. Right, guys? Fantastic job today. Let's hope tomorrow we get some bear traps, some buyer failures, double bottom reversals. Should be another great day tomorrow morning in our trade room. Now get out of here. Enjoy the rest of your evening. Thank you so much for tuning in and sticking around tonight. I'll see you guys tomorrow morning, 8 o'clock Eastern time, the trade room. If not, same time, same place tomorrow, and we'll get prepped tomorrow night for J-Pow coming on Wednesday. In the meantime, be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.